Hello, Matt Bannon here with Granite Point Tax Group, and I'm going to talk today about the tax impact of cancellation of debt. Now, a lot of people wonder why cancellation of debt would be taxable income at all, but if you think about it, if you owe some money and that person, say a credit card company, cancels that debt and says you don't owe us anymore, it's really the same thing as if you received the money and then forwarded it to the credit card company. So it kind of makes sense that a debt cancellation would be taxable income. And in fact, the tax code defines income as, unless otherwise specified, such as a gift or life insurance proceeds, generally anything that puts you into a better financial position is taxable income. So let's say you owe a credit card company $10,000, or it could be a mortgage or whatever, but you negotiate with the credit card company and they say, well, you pay us $2,000 and we'll write off the other $8,000. Well, you're going to get a 1099-C, cancellation of debt income reporting form, for the $8,000 they wrote off, and they will also forward a copy of that to the IRS, so the IRS knows to check your tax return for that $8,000. Then it's up to you to determine whether you actually need to pay taxes on that, because there are some exceptions to paying tax on cancellation of debt. Most notably, if a debt is canceled in a bankruptcy proceeding, that's not going to be taxable income just by statute. Anything canceled in a bankruptcy is not taxable. The other notable exception is if you are insolvent. Now that's a little trickier to figure out, but basically what you do is list all your assets. So I have our house at current fair market value, our cars, clothing, jewelry, retirement accounts, cash accounts, everything you own. Add it all up and total it. Then everything you owe, mortgage 1 balance, mortgage 2 balance, all our credit cards. This is the credit card balances before they are written off. Any other debts and liabilities, car loan, you add all those up and total it. Then you compare the asset total to the liability total, and if the liability is higher than the assets, then you are insolvent. So you take the difference, whatever that difference is, say you come out with $6,000 more liabilities than assets, so you're $6,000 insolvent, then of the $8,000 credit card cancellation, $6,000 of it is not taxable. But there is a form that you have to fill out because there's no way for the IRS to know this. So you have to fill out Form 982, I believe it is, and tell them of the $8,000 debt cancellation, $2,000 of it is taxable. Which way did we go? Yeah, $2,000 is taxable, $6,000 is not, because, and then there's a list of reasons why it might not be taxable, starting with bankruptcy. Insolvency is in there, so you check the insolvency box and then attach a statement showing here are the assets, here are the liabilities. The differences are insolvency, which was $6,000, therefore that portion of the $8,000 is not taxable. Now, when you exclude cancellation of debt income under the insolvency rules, there's one catch, which is that $6,000 you're excluding from income reduces other tax attributes you may have. For example, if you have a rental house or some other multi-unit or whatever, the excluded cancellation of debt income, that $6,000, reduces your basis in depreciable assets, like the rental house or any other depreciable asset you may have. Basically anything you're taking depreciation for on your tax returns. If you don't have depreciable assets on your tax returns, then the $6,000 debt cancellation would reduce other tax attributes such as net operating loss carry forward, capital loss carry forward. There's a whole list of these tax attributes that will be reduced by any debt cancellation that you're excluding from taxable income. And then, of course, any amount of the debt cancellation that isn't excluded from income, you just list on line 21 of your tax return, other income, cancellation of debt, and it's taxed at the same rate as your wages and anything else. So I think that's about it as far as cancellation of debt. Of course, it can get much more convoluted and complicated, as anything can when it comes to taxes. I'll probably do a whole separate little tutorial regarding abandonment of property, which is where, say you have a second home or a rental and you just let the bank take it back. That's there usually will be some debt cancellation in there, but there's a whole another set of rules to worry about it, for abandonment of property. So I think I'm good for now. Hope that helps, and if you have any questions, feel free to email me, matt@granitepointtax.com, or give us a call, 503-208-3736, and better see the disclosures about these tutorials on our websites, because I'm doing this pretty much live and unscripted, so, you know, there could be mistakes. You never know. So follow up. Call us. Okay. See you later. Maybe.